Bom dia, senhoras e senhores. Em primeiro lugar, gostaria de apenas tranquilizá-los, apesar do número de componentes da mesa, isso aqui não será o painel mais longo deste congresso, pelo menos a proposta é que sejam abordadas as questões de maneira bem objetiva. Mas a ideia era justamente aproveitar a presença aqui de nossos ilustres colegas estrangeiros para tratar de um tema tão importante, trazendo essa experiência internacional aqui para a nossa avaliação. Considerando que os distintos idiomas que são falados pelos representantes aqui do painel, nós escolhemos o inglês para o seu idioma, que servirá de base para as apresentações. Switch to English now. Well, the objective of this panel is to cover one of the most important international tax issues nowadays, that is base erosion profit shifting. It's called BEPS. And the importance of this subject is revealed by the fact that it has managed to put on the same table for its discussion representatives of the G20 group, G20, and also members of the OECD or not, and also that the outcome of the discussions will probably produce some sort of changes to the various national tax legislations, at least the majority of the countries involved, dealing with subjects like transfer pricing, taxation of foreign profits, tax treaties, allocation of profits to low tax jurisdictions and privileged tax regimes. So this is a very important issue, and to address the relevant aspects of SEMI, we have invited, and we are very honored today to have here some of the most important international tax aspects. Yes, Alejandro Messineo, Alvaro Villegas, Claudia Utumi, Clemens Schindler, Ricardo Escobar, and Marcos Catão. So now, considering that we are running out of time in the Congress, we will move directly to the presentations that will begin with Alejandro Messineo, that will refer to BEPS concepts and relevant issues. Catão will introduce Alejandro.
Thank you, Mr. Chairman. I'll introduce some of our friends. In the end, we are all friends. Alejandro is a very close friend. He's a professor in Argentina and also a very important tax lawyer. We've been together in many IFA Congress in Latin America and around the world. Alejandro, take a lead.
Thank you, Marco. Thank you, André. First of all, I would like to say that I'm very honored to be here, not only in this panel, but especially that this is the HOMENAGEM to someone who I care very much, who is Professor CONDORCET REZENDE, who I know for more or less 20 years. I have a lot of good memories, experiences, and I want to mention a short one, which I remember when I was living in Amsterdam at that time, and Professor CONDORCET was so passionate about international tax, and when the first transfer pricing rules came into Brazil, he was eager to get all the articles that were around the world on that, to translate them, to provide to his students the best material that he can do. So I'm very pleased to be here in the HOMENAGEM at CONDORCET, and thanks for the presentation. Well, I'm going to do the kickoff now. This is a word that probably is very common and will be more important in a couple of months. But this problem of the BEPS, as André said, is in a way a combination which has been encouraged by the G20 group and the OECD. There is a report already. The G20 is encouraging and putting a lot of pressure to go ahead and very fast with this project and with something that Alvaro is going to explain in detail, which is the action plan. Is my presentation This is for, I should, okay.
This is the pointer.
Which is the, what is the one? Okay. All right. So there was already a report in February 2013 where the OECD mentioned that base erosion is a serious thing to tax revenues, tax sovereignty, and tax fairness. The origin of this problem may be encountered, of course, in the some tax compliance aspect. The OECD has revealed that, of course, that the number of high-profile cases, and we can mention, we understand that they were probably referring to the Google, Amazon, Starbucks, some cases that gave rise to, in a way, to this problematic. And one of the origins, as I said, is what the government see as there is, in a way, a different situation between the international common principles that, according to national experiences, are used to share tax jurisdiction, which are not keeping base, in a way, for what's going on in the business community. This, I'm going to explain from detail, but these phrases are, I would say, one of the key issues to understand why the BEPS has been developed and let me see, and why we are talking about this, and now it's a very hot topic. Globalization is, of course, a concept that has been used in the recent past, and we know that because of that, there has been a change in the way business has been done. It has generated a lot of benefits to the economies. The shift of manufacturing bases from high cost to low cost, the free movement of capital and labor, which is something that has been encouraged and promoted from governments and OECD from many, many years. The removal of barriers, of course, as in Argentina, I have to say that this doesn't necessarily apply to everyone, unfortunately. Technological and telecom developments, managing risk, and the development especially of intangibles and intellectual property. This is one of the fundamental aspects of the globalization, which has brought many important or different ways in which the cross-border activities has been carried out. Like, for instance, the boosting of trade. Trade is much more in volume now than used to be many years ago. The increase of direct investments, and this has generated like not only the creation of jobs, but also the lifted from people from poverty to a better situation. And this is what OECD considers that is one of the situations of the globalization. But the globalization also, and this international sphere, generates, in a way, an impact in companies and an impact in the corporate tax systems. The interaction of international trade, already in 1920, it was considered that it has to be taken into account the adverse effect of growth and the problems that could carry out the double taxation, which was one of the first topics that was tackled in that time. But this globalization also generate the way in which business are being done. The multinational enterprises now are an important subject in the global economy, in not only in their interaction with third parties, but also the interaction between them, what is called the intra-firm trade. But also this entails that the way the business have been done in the past, from a country analysis, has been now tend toward something which is much more global, or at least regional. And this entails also that, for example, the business are done in a way that a whole group is in charge of what is called the supply chains, from the very first beginning of a natural resource to the last part in which the consumer receives the final product. So this is a way in which business has been done in a different way from what is nowadays from the past. Decentralization of functions on the global level, and the importance of services components and intangibles, digitals, and something which is also mentioned over here, I think. Let me see if I have the right, yes, which is the location in a different way of the production where the customers are. So far, this is objective concept. So far, there is nothing which is something to be concerned about. But this development, says OECD, has exacerbated in a way the sophistication how tax planning is being made. And now here comes the problems of when we will get to the core of BEPS. So this way of doing business in a global way has generated that the tax planners to use sophisticated legal opportunities and boundaries of accepted tax planning. And so it is important here that we focus on the concept, because if we are talking here about accepted tax planning, we may understand that there's no problem in such a word. So while be something a problem if someone is in a way dedicated to look for the best tax situation according to the legal framework which is considered. But this OECD mentions that has given confidence to multinational enterprises to use aggressive tax positions. And here comes the second concept about what is aggressive tax position. Is an aggressive tax position one advantage that the taxpayer has taken because there is a loophole in the legal framework where probably that loophole has to be filled in? Or if tax aggressive position is something that is now bordered with a behavior that is against the law, or even within the law, something that can be challenged. This is something that we are going to see. OECD stressed that with this aggressive tax position, governments are harmed because there's less revenue and higher cost of compliance, undermines the integrity of the system. The reported low corporate tax is unfair. That's a feeling for the public in general. And it also mentions that in developing countries, the less revenue would generate the underfunding of public investment. I think that this is something not necessarily, of course, that developing countries needs more for public investments, but this may apply also to any country. So, and it mentions that when there is an overall resource allocation where the decision of allocating a certain resource is based or is tax motivated, when that is a concern, and that should be tackled. Then another consequence of this is that the individual taxpayers are harmed in a way, because if big multinationals adopt these positions, they are in a way in a different situation for individual taxpayer or small taxpayer. And in this way, there would be a competitive disadvantage. So if we compare international companies with domestic ones, then we would see that the disadvantage is even greater because of the policy of this aggressive tax. So the interaction of domestic tax rules generates two main issues. The main issues are gaps and frictions. The friction between this interaction will normally generate double taxation, and that is why from the beginning of, for many, many years, when there is a competitive in a way between two countries, the idea is to try to get in a consensus to avoid double taxation. And that's why the friction is tackled in a way. But the gaps is a situation in which no tax or nominal tax is being paid. So, and that is something different. In the domestic scenario, there is a coherence. What is a coherence? Well, that means that normally if someone gets a deduction for a payment, on the other way there is another party that gets a revenue which is taxed, unless a particular exemption applies. So, but this doesn't necessarily apply in an international scenario in which one country decides its own rules and then it doesn't think about what the other countries, how the other country is going to be affected. And so here comes the situation of the gap, and then the opportunities that we have been thinking. So international standards sought to address in this issue the frictions, but gaps remains. And sometimes the treaties deal with this, sometimes the treaties are a solution for this scenario, and others not. So when it comes to the concept of BEPS, we would say, well, the weakness of these rules, or the problems with the interaction of the different domestic rules, may generate opportunities to BEPS, opportunities for the taxpayers to do a base erosion and profit shifting. And so if the arrangements that achieve no or low tax jurisdiction by shifting the profits away from jurisdiction where the activities creating profits takes place, then we have a problem, and then we have a BEP in a way. So here I'm sorry. So if we say that here we are. So see, I wanted to point here the issue here where the activity is created, and this is one of the main aspects. So if the shifting of the profits is away from where the activities are created, then we have a problem here. But in principle, we would say, well, if this shifting of profits is made under a legal framework with a business purpose, then we don't see the problem with that. And that's why not necessarily a low or no tax may be per se a cause of a problem. But when in this case, the low or no tax payment is associated with artificially segregated taxable income from the activities, then here comes the issue. And so I think this is an important differentiation that we need to make in order to determine when we are in a BEPS issue and when not. Because what would be, as I say, a problem also if based on BEPS, we are going to challenge any legal business structure which generates a lower tax revenue for the authorities. So there is a concept here by an author. He says, its basic idea, shift profits across cross borders to take advantage of tax rates lower than in the country were made. Well, the question is why, and if there has to be a subjective condiment or not, because otherwise the definition as it is read here not necessarily should generate a situation to be challenged. So in this case, the tax policy concern is that due to these gaps between the different domestic rules and the international of the tax system, and the OECD states also even sometimes because of the application of tax treaties. I don't want to go into detailed examples which are going to be discussed later, but we have to be very sensitive with this concept because why the application of international tax treaty and domestic law may generate a problem. Okay, in such a case, probably the solution would be that the governments get in conversations and amend the treaty. All this is, of course, in a way, more evidence in the time where we are living, in which the digital economy, in which data, intangibles are an important part of the economy. And because of this, then we see that the problematic situation of the governments, which see a distortion in this practice, there are more evidence. Mm-hmm. The G20 in September 2013, which is this, after the action plan that Alvaro is going to mention, say that profits should be taxed where the economic activities deriving the profits are performed and where value is created. So this is an issue that now is bringing some of old questions again into discussion, where the taxing rights would be, where we have to focus the attention. And here is, well, if we don't want to see this type of distortions, then we have to consider, in this case, where is the value created and where the profits are performed. There are some concepts that, like analyzing the companies, how enterprises add value in the supply chain. So the weakness, in a way, it would be if the consensus-based framework that now applies in the world in a way with the tax treaties where the consensus needs to be found in order to avoid that there is individual positions of the different countries just preserving their rights and preserving themselves. Because if everyone is going to adopt their own position to preserve their revenue, the OECD says that this is going to be a chaos. And that's why there needs to be an harmonized analysis and cooperation between the countries to tackle the problem of the BEPS in order to avoid this chaos. But what I would say is, of course, that what is called the artificial situations needs to be tackled, and this needs to be not only analyzed but also coordinated between the countries. But if a country considers in a way that there is a base erosion and so there is in a way a less revenue that is being paid to this country, when dealing with this, there are some fundamental issues we need to keep in mind, because otherwise we'll be on the other side of the problem. Constitutional rights and the rule of law has to be respected. No, because of, oh, I consider that there is a BEP, I issue an interpretation resolution, and then I am going against the law. The way the legal rules are drafted are very important, and therefore there is a need and the responsibility of the governments to analyze where the problem is and to issue the respective laws on that. So government should focus on how rules are drafted and not go beyond in practical application by in a way the consideration that there has been a breach to this principle. The exchange of information and as more automatic as possible is one of the aspects that the G20 is strengthening and is promoting. And of course, but the legal rights of the taxpayer to defend themselves and also to the right to counter evidence on information should be considered in a way. Refraining from application of legal presumption without right to rebuttal that again are against the taxpayer's right is also another aspect that needs to be taken. And if we are considering that there is some excessive use of legal tools by the taxpayers, also something which is nocive is the excessive use of the principle like the economic reality or the substance over form in order to overpass a legal framework, which in a way is something that would needs to be ordering and organizing the society as such. Thank you.
Thank you, Alejandro, for these introductory remarks on the subject. And referring to the OECD report that you mentioned, we will now cover this issue with Alvaro Villegas that will discuss the action plan proposed by the OECD report.
Yeah, it's my task to introduce the speakers. Alvaro is another very close friend. It's one of the leaders, of tax leaders in South America, in Latin America. By the way, I have to say that we have a very important seminar encounter in Santa Cruz de la Serra, the 6th IFA-LATAM tax meeting seminar, and that Alvaro is ahead on this. On May 7 to 9, the inscriptions are available on the internet, and I think that you should go to Santa Cruz de la Sierra to see this nice land, okay? Alvaro, go ahead. Alvaro is also president of IFA Bolivia and professor of Universidad Pacífica Santa Cruz.
Thank you, Marcos. It's very nice to be here. It's my second visit here in this forum. And as Marcos says, you are very welcome to visit us in Santa Cruz for the next 6th Latin American Tax Conference. And Brazil is making a major contribution to this conference, not only because of the 9 speakers and chairs involved in the conference, but also with sponsoring. We have our friends of Gaia Silva Gade as one of our sponsors, and also just confirmed Petrobras is also with us in Bolivia as a sponsor. This topic that I have to address now, it would be easier after the introduction made by Alejandro. Thank you. And the introduction made by Alejandro was a very complete one. So I think we may start talking about the action plan. The action plan basically calls for fundamental changes to prevent BEPS, as Alejandro explained. And that's fundamental changes are focused on 2 topics: current mechanism and adoption of new approaches. Of course, these new approaches may be achieved by a consensus. And the significant changes on the international tax systems, we may just make a list because it involves transfer pricing, permanent establishment, hybrid entities, instruments, exchange of information, mechanisms to solve controversies like MAP and others. This action plan sets forth 15 action items, and it is intended to be complete in 2 years, from 2013 to 2015. It seems that a lot of work have been done at this time, so we have to make to be confident that we are still in a way to contribute for these changes of these consultations. Before speaking about the 15 action items, I would like to grouping the actions. In this case, we may talk about 5 groups of actions. The first one would be addressing digital economy challenges. And this is one group because it is a very particular action. And the second is the established international coherence of corporate income tax. And it involves 4 main issues that we are going to see in a chart that I prepare for you. The other group is restoring the full effects and benefits of international standards, which involves 5 main issues, and ensuring transparency, instruments, and certainty. Transparency instruments will be most of developing instruments in the international perspective, and the final would be an isolated item, which is developing multilateral instrument. The next, what you have here is a chart that is intended to summarize the OECD action plan. It is most the better way to understand what is happening here. And it is like a timetable, right? You are going to see, sorry, here the action, the number of the action, and the output, what is intended to result of this action, the timetable, is the deadline, and the status. So we are going to see what is happening now. And of course, if someone has more updated information, I would like to contribute in this way. The first action is address the tax challenges of the digital economy. And it is expected to have a report about this issue. The deadline is in September 2014. And now you may see that it is very advanced. So the public discussion draft has been released in 4 days ago. So the comments are still available until April 14, and this as action is major is discussing about even the concept of digital economy, and if it is a practical matter to establish a tax regime only for internet companies or not. And it seems to be that there is no other way that they are going to follow. The action 2 is neutralize the effects of hybrid mismatch arrangement. It is a matter of arbitrage, and the output would be changes in the model, OECD model, and the domestic law. So that's the important part of the BEPS. The BEPS are not, the action plan is not only intended to modify international instruments, but also a domestic law, making some recommendations to work on that. And the risk is that countries may follow individually measures. So it's very important to have a consensus about how domestic laws have to be modified. And a public discussion draft will be released in a couple of weeks more, in April 4th. The third action is to strengthen the CFC rules, which is the output is only domestic law for September 2015. The other is limit-based erosion via interest deductions and other financial payments. As you can see, this number 4, action number 4, is very related with number 2 and number 3. So it is like a group, even with the other one is number 5. It is in the limited erosion via interest. It is expected to have some modifications to domestic law and also to the transfer pricing guidelines, to OECD work. And the fifth action is counter harmful tax practice more effectively, taking into account transparency of substance, is the revised criteria actually made by OECD. And we have a different dates here in September 14, 15, and even in December. And this is because this is very related with the other topics. So as we are rich, one output, for instance, in the strength CFC, it means that it is not the final discussion. It will be more practical discussion for other actions. And number 6 is prevent the treaty abuse, and it seems to be very important to modify the model, OECD model, and also to take measures in their domestic law. The public discussion is also advanced in the draft has been released on March 14, and comments are available until April 9. What else? Also, we have the 7 action here to prevent artificial avoidance of PE status, and the output is a report. The deadline is 2015, and the others are related with transfer pricing issues. So, the important thing here is the action is to assure that transfer pricing outcomes are in the line with value creation. That's what Alejandro mentioned before. And it is related with 3 topics specific in transfer pricing. One is intangibles, the other is risk and capital, and the 10th is the other high-risk transactions. The number 8 is maybe one of the most discussed at this time. And it involves the project to revise transfer pricing guidelines. As you know, these guidelines has been released, I think 2 weeks before BEPS has been in action. But it means that the project to revise transfer pricing guidelines is subsumed into this action number 8, and the public consultation is closed at this time for this action. And the other, number 8, will be finished in September. The action number 9 would be in 10, is in September by 2015. So the output would be that the OECD model and the guidelines of the OECD will be revised. For transparency, which is the major concern for multinational companies, we may address these actions in 3 of the following numbers. Number 11 is to establish methodologies to collect and analyze data on BEPS, and the action to address it. All the recommendations would be involved to transfer pricing guidelines on transparency. The other is require taxpayer to disclose their aggressive tax planning arrangement. It involves some major discussions because of the confidentiality of information, especially, and others. Finally, the 13 is also related with transparency, and it is intended to re-examine transfer pricing documentation, and it is also expected to, directed to modify the revised chapter 5th of the OECD transfer pricing guidelines. We are finished the consultation in May, and the public discussion draft on transfer pricing and country-by-country reporting has been released in January. And country-by-country reporting, it is intended to have a template of information of the multinational companies. And it has been very criticized because of the kind of information and detail of information. And it's very controversial at this time. And comments will be are closed in February, has been closed. And I think there is no complete consensus about it. And the action number 14 is about making dispute resolution mechanism more effective. It is rethinking MAP and other mechanisms involves a change, a proposal of changes in the OECD model. And the last one is very important also, which is one thing that everybody is going around at and trying to develop a multilateral instrument. As you may see, they expect to have one outcome in September 2014 and in 2015 also. But it is a very special timetable, so it is very challenging to adopt resolutions about this in 2 years. So I think good luck would be necessary there, and that's the the final text. Thank you.
Thank you. Thank you, Alvaro. Well, I believe that the details on the actual plan have left clear to the audience that how much complex and comprehensive is this issue, and the amount of work that will be required as well. Well, now we'll move to Claudia Utumi, that will speak about the repercussions of the BEPS issue in Brazil.
As a vice chairman, Ana Claudia is, again, a close friend. And the good from Ana Claudia that you have two countries representing just one person. Ana Claudia is a very tax specialist, very intelligent, very smart, and is also director of ABDF, is a member of the Permanent Scientific Committee of IFA, and is the coordinator of the tax department at FIPECAF in São Paulo. Ana Claudia, thank you.
You forgot to mention what is the second country, because I don't speak any Japanese. And my dear friend Raquel Preto here, she usually say that some of the funniest situations with me that was when I was a speaker in IFA in Kyoto in 2007, that they included me as a speaker of Japan. So people used to approach me speaking in Japanese, and I was looking, okay, yeah, okay. So I don't know exactly what is the second country represented here, but it's okay. Well, now going to serious matters here related to BEPS. Maybe one thing, one question. Do you think we are ready for all these new discussions that is coming up from outside Brazil? And what could be the implications here in Brazil? So let's see. One point, why we need to follow BEPS closely. Because look, this is what happens in our country. Whatever I do today, 2014, the tax authorities will take 3, 4 years, 5 years to make the audit and make the tax assessment, of course. The administrative process will take some other years. And then, if we need to go to the judicial courts, we may be discussing whatever we do today in 10, 15 years easily. But whatever will be judged within 10, 15 years, I assure you, will not be with the mindset of today, but rather with the mindset of what will be there. You just look at the past tax planning transactions here. We used to have in M&A transactions those transactions that were famous to say marriage and divorce. Nowadays, we look at the situation and say, well, who would believe that someone married at 10 a.m. and divorced at 4 p.m.? But at that time, when the transactions were done, most of the corporate lawyers, they used to do that by themselves without the tax lawyers, because it was so common to do this kind of transactions in M&A. And looking today, we look at this transaction and say, it's ridiculous. But at that time, it was making all the sense. So what we need is try to anticipate whatever may happen in the future. Of course, that we don't have crystal ball, unfortunately. It's a pity. I would be rich if I had this crystal ball. But at least we have some indications of where are we moving towards. So I think that BEPS is a very important indication on that. And look how the foreign legislation influence the Brazilian law, the Brazilian tax law. What we have that is not a creation, a genuine creation of Brazil, so it's not a jabuticaba. It's the fruit that we have only in Brazil. The taxation on a worldwide basis, both individuals and companies, transfer pricing, thin capitalization, IFRS accounting system, customs valuations, and control of tax haven jurisdictions, everything. So all these things that we have in our legislation, it was influenced by foreign legislation. So that's why we look today at this name BEPS and we say, oh, it's a anachronism, a nickname for something that's not interesting for us because it's happening at the OECD. Yes, it's interesting for us. Brazil is part of the G20. This is not a project of OECD. OECD is leading, but the project belongs to G20, so belongs to Brazil. And all this legislation that we have in place, influenced by foreign legislation, is evidence that things will reach our country here. And one of the main impacts that BEPS may bring relates to even more strength in the control of tax planning related to the just general anti-avoidance rules, to increase of analysis of tax planning, and to the extent that the countries will coordinate themselves to avoid one country to lose revenues to other countries. So you have, I dare to say that we've already lived many globalizations eras, and now we are in the era of globalization of tax authorities. The tax authorities, they are talking more to each other, they are combining more what to do, so this is very important, and this is very important impact of BEPS. And in this part of the substance over form, just remembering that in Brazil we used to have a very formalist approach, and more we've been moving towards a substance over form and business purpose analysis, in which it's important to evidence what is your objective other than saving taxes. More and more saving taxes has to be a consequence, not a cause of whatever we are going to do. And this is just a brief comparison, but very quickly, I would compare the substance over form and the form over substance in this way. You have the point A and point B. For you to go from point A to point B, you can take different ways. When you are analyzing the form, you are analyzing each step of the way. You are looking whether each of the steps are possible or not based on the law. When you are looking at substance over form and business purpose test, you are not looking at the steps. You're looking at the beginning, at the end, the economic result. You are looking at many different things here. And our problem is that we don't have a legislation on that. And I also think that in Brazil, it's better for you to have a bad legislation rather than not having a legislation, because with a bad legislation, you know what you are fighting against. When there is no legislation, which is the case, you never know what the tax inspector will say about your transaction. It can be something that had nothing to do with a tax planning. But what I see from the tax auditors today is that oftentimes the tax authorities are trying to say what the companies should have done if the tax authority was the manager of your company. So what the tax authorities would have done if they were in the management of your company. And this is not substance over form or business purpose analysis. So I think that this is very bad, and this can be worse with this, with the more interaction with all the discussions of BEPS. The other outcome is the exchange of information. Where there is this mutual agreement in tax assistance that has already been signed by more than 50 jurisdictions. I have here the list of the jurisdictions that have already signed, including Switzerland. Switzerland, 2 months ago, appeared in the news saying that Switzerland agrees to exchange information. So it was this treaty that Switzerland signed. Brazil signed it, but not ratified yet. And this is a big thing because it's not exchange of information upon demand. They want to have exchange of information automatically, not on demand as it is today. So it's a very, very ambitious project that will certainly affect all the Brazilian individuals and companies that hold assets and interests outside Brazil, as well the non-residents that invest in Brazil may have consequences as well. So, but you see, the United States decided to move ahead and not wait for the global, and so July they are going to start enforcing the famous FATCA. We are very much concerned in Brazil because we don't have the intergovernmental agreement between Brazil and the US in place yet, which means that Brazilian companies will probably be subject to 30% of taxation after when FATCA is in place, which is a huge taxation in the US. And so this is very concerning. But look, Brazil has signed a number of exchange of information treaties specific because all this work in the form of tax transparency of ACD, of this exchange of information efforts. So Brazil, it's not something that we use to pursue exchange of information agreements, pure exchange of information. And in the last years, Brazil has signed a number of them, especially with the traditional, let's say, tax haven jurisdictions. We have a number of treaties signed. This is an article that when the materials be available to you, you will be able to read, but saying that the rich Brazilians are the 4th largest fortune in tax haven jurisdictions. So that's why they are chasing so much the exchange of information, especially with the tax haven jurisdictions. And so, a part of that, you have more countries, and Brazil as well, chasing treaty shopping. Look at this discussion of the provisional measure 627. One of the discussions is whether they draft the legislation saying the word foreign profits, or whether they say, oh, it's the result of equity pickup method. Why they are doing that? Because they think that if they keep the wording, the result in the, registered in the Brazilian books based on equity pickup method, they will avoid the use of treaties because they say, I'm not imposing taxes on something that happens outside Brazil, but on something that is happening in our balance sheet here. I don't agree with this argument, but anyway, in this, now they are discussing this. And the BRICS country, they have already expressed that they want to develop a joint control of transfer pricing, especially transfer pricing, to avoid losing revenues from one country to the other. And here in Brazil, a part of that, we have a number of controls like electronic controls. Now we have the e-social, we have the electronic LALUR that will be in place, so we'll have all these electronic things, this very aggressive manner of attacking companies that may be even worse when with all this influence of BEPS. But what I wanted to also say is that there is a discussion that hasn't reached Brazil yet, but it's very strong. Clemens will give us more information on what is happening in Europe. But look, what is being discussed outside Brazil is the morality, tax morality. So you have, this is something that came in the internet. In the internet, you can find lots of things like that. So saying that the multinational companies, they avoid taxes and they are making the governments poorer, they are making the population suffer. You see the Starbucks case, this is very funny, but it's real. What happens with the Starbucks, they say, don't drink coffee in your Starbucks, but rather in the local shop that pays taxes. The discussion of the speech of David Cameron in the Economic Forum, everything, the Google and the Apple case, everything to say that this morality discussion hasn't reached Brazil yet, and I don't think it will reach probably in the next 5 years, but we don't know how it will be in 10 or 15 years. Why I don't think that that will not come in the next 5 years? Because of this image that our politicians have, because everyone thinks that the government spends badly our money. The average population thinks that evading taxes is socially acceptable. But we don't know how it will be in a course of time. And the main problem of this discussion of morality is that taxation outside Brazil starts to harm the reputation of the companies. So it's bringing reputational risks. And morality discussion brings another uncertainty in a very uncertain scenario, which is our tax scenario here in Brazil. So these are the highlights that I wanted to give you on BEPS. And I urge you all to follow closely the discussion on BEPS. And when thinking of what to do in your companies or your clients, consider what has been discussed under BEPS to take the decisions. Because today is not an issue, but in 10, in 15, in 20 years, it may be. Thank you.
Thank you, Ana, for bringing BEPS to the Brazilian perspective so clearly, showing that it's not so far away from us as sometimes it seems to be. Well, now we'll pass the floor to Clemens. The Schindler there will cover the issue under the European perspective now.
Clemens is another close friend. The funny thing to say about Clemens is a very well-known practitioner here in Brazil. He has many clients. He has a PhD from the University of Vienna, and he's a close friend. The funny thing to say about that, after this week, I think so, Clemens will become a Brazilian resident instead of Austrian resident, because he comes so frequently to Brazil that is going to happen in the near future. Clemens, go ahead.
Thank you very much for the very kind introduction. It's really a delight to be here, and I remember pretty well some 4 or 5 years ago when we had a similar, although smaller, conference in the Fejan building, also organized by ABDF. A lot of the discussions that we're having today actually were only in its early development. And the chairs of today's panel, I think, have very well chosen also the order of the presentations, particularly now with regard to the presentation of Ana Claudia, who said that probably Brazil will not feel the developments that soon here in Brazil. What might, however, be an interesting observation is that Brazil might feel the developments actually quite quickly, indirectly, because the Brazilian companies, and I'm following them now for a number of years with a strong focus over the last 4 or 5 years, have really developed a very, very international business. The reason why I'm here on a constant basis is that a lot of the Brazilian multinationals, but also Brazilian companies that so far had mainly domestic business, have expanded rapidly in the international scale. And that is true for companies in Europe, but that is also true for companies outside Euros. So the footprint of Brazilian companies over the past years has grown rapidly. Accordingly, the discussion of BEPS is a discussion that is very relevant for Brazilian companies. And probably the three most important areas that were touched today in terms of BEPS with regard to Brazil would probably, or let's say two, would probably be the choice of hybrid instruments on the one hand, as well as the mismatch, for example, of transfer pricing rules, where even in Brazil you have seen some changes in the past years to adopt, at least in some areas, to mention here are the commodities, a closer approach to OECD than they had before, simply because the mismatch of the Brazilian transfer pricing rules and the OECD approach was one that could actually be very beneficial to tax planning structures. The focus of the presentation today, which will cover also developments in the EU, will probably be hybrid instruments, also given the limited time we have. I think it's good if we focus on something. But in the very first slide, because it also was mentioned in previous presentations, I just wanted to highlight the Exchange of Information Directive that the EU has passed, and there were predecessors of this directive in the EU already. And the reason why I'm mentioning it is because the European Court of Justice in numerous cases has always shifted the burden actually to the member states and their tax governments to say, well, once you have a mechanism like the Exchange of Information Directive, you really have to make sure that you exchange the information effectively. You cannot blame anyone if, for example, a member state would not contribute or would not provide you with the relevant information. You cannot sanction a taxpayer for actually the misfunction of the cooperation between member states or tax authorities. So that's actually good news for the taxpayers. In the first place, you might think, oh, such a directive harms you, but to be honest, in many cases of the ECJ, it was actually to the benefit of the taxpayer because the exchange of information was not working, and still the tax authorities could not raise that argument to uphold some national rules that actually hindered some of the work. Now, shifting to the hybrid instruments, we have here a slide on a directive that probably is known to many of you, even if it's a EU directive. It's the so-called Parent Subsidiary Directive, which in a nutshell says that within a group of companies, dividends shall be exempt if you dividend up funds through the chain. That, with the specific situation in Brazil and your rules on dividend distributions might all sound odd, but generally within Europe, a dividend would be seen as general income and would be taxable in the respective countries unless you would have a specific exemption, both in the domestic and the cross-border scenario. So with regard to the cross-border scenario in the EU, there was the Parent Subsidiary Directive. It was one of the first directives passed in the EU. The year 2011 here only refers to the latest version. We now have, which is interesting, again a new proposal, and again in this proposal there is a lot of combat for abusive structures, for artificial structures, but it also includes a very specific clause on hybrid instruments. In relation to the Parent Subsidiary Directive, the mismatch typically would be that in one country the distribution would be tax deductible, whereas in the other country the distribution would be exempt from tax. So what they are now proposing is to actually include a provision saying, refrain from taxing such profits to the extent that such profits are not deductible by the subsidiary of the parent company. So they clearly here make a restriction, and it's very likely that this actually will be passed in such or a similar way. And the interesting thing is that member states, even if such directive is not passed, typically already start to amend their domestic laws to actually also accommodate that in the local rules. Oh, sorry, that was not the wrong side. On the other hand, and I think that is important to see, is that the European Court of Justice, and I've here just mentioned the Cadbury-Schweppes case, was actually quite accommodating to the needs of multinational companies. And particularly the ECJ over the years has continuously kept up and upheld a case law that says, well, if you are an internationally or even globally active company, it is obvious that you will choose a structure that is most beneficial to you. And that brings me to one of the most frequent questions I am being asked by Brazilian clients. How much substance do we require to implement this or that structure? My first answer is then always to say that this actually is more a Brazilian question than an Austrian or a foreign question. But I then quickly follow up by saying that actually any structure is only as good as the life that you give to the structure. So substance is a very relevant issue. Substance is an issue to make your structure sustainable, but substance is also extremely important to really take advantage of your international structure. It is that you raise potential for international business. It is that you get access maybe to financing markets you wouldn't have otherwise. So all companies that have actually sent people to the international offices have made very good experience with that. It goes without saying that with more substance, every structure is more defendable. So when you are advising a client, or if you are in the tax department of a company, I think the first question you have to ask yourself with regard to substance is, why are we doing it? If tax planning is the only answer, then in light of BEPS and everything, times will be very difficult for you in the future. If you, however, find good arguments why you are setting up something in a foreign jurisdiction, and that is exactly why I'm mentioning here also this Cadbury-Schweppes case, then chances are still pretty good, despite all the discussion on BEPS. So I've here also on the slide, and it's unfortunately extremely small, but when you then read through the materials, I thought it's still interesting for you to see. I have here, for example, compared also the position of the European Commission as well as of the OECD. And you will actually find in many situations that the European Commission will on the one hand try to accommodate and implement what the OECD is actually here stating, but on the other hand, clearly also states that there should be certain flexibility. The EU is seeing Europe as a common market. This is the main principle of the EU. So you will never find yourself in a situation where the systems of all member states will be the same. So the EU, by definition, is a market and a concept which will allow for a certain arbitrage. Even more so, they will allow for a certain arbitrage of non-EU countries or companies entering the EU market. But on the other hand, as I've mentioned, first countries are starting to amend their rules. And if I want to give you here some examples from Austria from very recent changes to the law, it would be, for example, the limitation on the deductibility of interest expenses. Before or until early this year, there were no limitations with regard to the deduction of intra-group interest. We don't have any thin cap rules in Austria. Of course, if you would have some excessive debt financing intra-group, particularly with the goal of base erosion, then some general anti-abuse rules might kick in, but there were no statutory thin cap rules. So the general rule was that also interest expenses within the group are fully deductible, even if they would not be taxable in the state where the interest would be paid to. could actually reduce your Austrian tax base without having to prove that the recipient of your interest would be taxed on the income. Well, that was changed in a very recent amendment of the law, and now the interest is only deductible in Austria if the tax rate in the other country is at least 10% or more. It's interesting to note that 10% compared to the Austrian rate of 25% is a quite low rate. And also looking to the EU, actually all member states right now have corporate income tax rates above 10%. So agreeing to 10% is, I think, a sign for this compromise of, on the one hand, following this development, appreciating what BEPS tries to achieve, but on the other hand, not being too radical in terms of killing anything that we might call tax planning or efficient tax structuring. With the result of Brazil, of course, you would not be in trouble given the Brazilian tax rate. Something different might be true for the so-called profit participation rights or jouissance rights. That was actually a structure frequently also implemented between Brazil and Austria, where actually the idea was to here have a certain mismatch of the treatment in Brazil and in Austria. Those instruments under Austrian law were always structured in a way to qualify as a debt instrument, and payments under that debt instrument had been fully deductible in Austria. In Brazil, on the other hand, the idea, and this was an idea that also was criticized by some scholars, was that payments under such instruments should qualify as dividends under the treaty between Austria and Brazil, because it specifically refers to the so-called jouissance rights. To cut the story short, with the new rules, exactly that mismatch should not work anymore, and that was the idea that here the Austrian tax authorities followed, because it was the classical example of a hybrid instrument. So structures like that need to be revisited and cannot be used in the future anymore. Another example with respect to the generally very broad participation exemption is that we fully exempt both capital gains as well as dividends from foreign corporation that are held by an Austrian corporation. But we have two exemptions to that. The one exception is that the dividends may not be deductible in the source jurisdiction, which is exactly what now is foreseen in the parent subsidiary directive. The second aspect is our so-called switchover to the credit method if the foreign income is either passive or low taxed. I'm here saying or to be more strict. Generally, the law says and. It really depends. If you are clearly active, you will not have a problem. If you are taxed at a rate of at least 15%, so in this case it's 15% or more, you should also be good. But there are, as we all know, many situations where you are somehow in between. It's not really clear, are you passive, are you active? What is now the really relevant tax? Is it the tax rate? No, it is actually the effective tax rate. But if you try to translate that from the foreign jurisdiction to your own jurisdictions, there are of course many issues that remain open. And so there are rules in Austria and in other countries of the EU to actually address those issues of BEPS. The good news, on the other hand, is that in countries like Austria or the Netherlands, you have a very established ruling practice. So exactly the question of whether or not a participation exemption applies or not is a question that you can address in a ruling. So you can give yourself as a company the certainty whether or not future dividends and capital gains will be exempt or not. And I believe that that is actually also something we'll see more and more in the future. What is important for a company is certainty, planning certainty. Even if you don't have the ideal solution of not paying taxes at all, and as we heard, this actually might be something that is also not appreciated by the public, then go for a structure which reduces your overall tax rate, but is also connected to certainty. So we, in fact, see more and more companies agreeing to actually paying, a substantial amount of tax, however, definitely one that is, on the other hand, substantially lower than what they would be paying without tax planning. However, with the advantage of having certainty, for example, through APAs, through other kinds of tax rulings, in order, particularly if they are listed, in order to also suit the interest of various stakeholders, but here particularly also their shareholders, if they are a listed company. And that, in fact, was also the reason why some Brazilian clients of ours have actually participated in the refis here in Brazil only with part of their open cases. In some cases, they have decided to continue litigation because they believed that their arguments, for example, with regard to treaties, should be upheld, whereas also to meet the expectations of analysts and shareholders, participated in the refis with some other cases. Good. To just give you one other example that was not mentioned so much in the BEPS discussion yet, but across the borders, one thing you always need to deal with is withholding tax. And for example, one structure that was quite common between Brazil and Austria was the use of two holding companies, whereas one of it had place of effective management in Brazil. This was a structure I always found very aggressive for various reasons, and it's just a good example where I believe you would have difficulties in arguing to the tax authorities both in Austria and Brazil the reason why exactly in such a case you would use an Austrian company. I think it would be pretty difficult if clearly place of effective management is in Brazil. You are lacking exactly what I've mentioned earlier, talking about substance. It is the story behind it, the business rationale. Why would you use a foreign entity if place of effective management is in your country? So I think we need to be more careful about those arguments in the future. The one case that was mentioned quite often today was Google. That's why I included it into the materials for those who only have the information from the news or media. And there is another slide also on Google and Amazon, which in a nutshell just confirms the worries of the public that having billions in profits and paying only millions in taxes is or seems to be not as acceptable anymore. So I think to close the presentation, what is really my expectation for the future is that tax planning will tend a lot more to structures giving you the certainty with a reasonable amount of taxes that will be paid. And on the other hand, of course, making sure that if you do international business, that you avoid tax inefficiencies, which you can easily find if you don't actually plan your structure properly, but that we will not have the requests anymore of a tax that is zero or close to zero. Thank you very much for the invitation to the conference and for your interest in the presentation.
Thank you, Clemens, for providing us your European approach on the issue, and I would say with a Brazilian flavor. Well, now moving to the last presentation that will be made by Ricardo Escobar, addressing the influence of BEPS on tax treaty provisions and development of a multilateral instrument.
I'm not an Indian, but I would say again that Ricardo's a good friend. But Ricardo Ricardo is now a tax practitioner, but he used to be the commissioner chief of Chilean IRS, or tax administration, and has the advantage of being not a good cop and bad cop, but behind the desk, in front desk. And those who knows Ricardo, knows that Ricardo is a very smart and very objective person when deals with tax matters. So Ricardo, go ahead.
Obrigado. Well, I'm between you and lunch, so I will try to be quick on my presentation. I will be talking about the impact that we can anticipate will come with BEPS and tax treaties. And I'm not sure which one is working here. This one. Okay. So, well, tax treaties are a popular target for BEPS. You will see that in many of the actions there is a reference to treaties being modified. The proposal that will come in BEP is some adjustment to existing treaties, to the existing OECD model, or otherwise an adaptation of the current tax treaties. So the first example where this appears is in Action 3, which deals with neutralizing hybrid mismatches. This has to do with either hybrid instruments, hybrid entities, as well as dual resident entities. What this action is looking for is to provide in the treaties for some recognition of these legal instruments and entities, and to realize that they need to be dealt with in a different manner in the treaty. So you should not be surprised that some amendments will be suggested to the OECD model to deal with this type of entities in the treaties, something which is currently not recognized in the definitions of who are taxpayers, for example, and residents. So this is an area that probably will be touched. In Action 6, there is an emphasis in preventing treaty abuse. And what is being discussed here is something that Clemens was just referring to, the interposition of third states with low tax branches, conduit companies, artificial transfer pricing. This is an area where I think is one of the best examples of where law and BEPS will collide. BEPS is based on a reaction, a political reaction to something which is true, which is aggressive tax planning. But the border between aggressive tax planning, legitimate business decisions, legitimate organization, you need to organize yourself somehow, right, and celebrate contracts and have companies. Where are you going to draw the line of what is legitimate and not legitimate? And here, I just would like to come with a couple of examples I have seen recently, and Claudia was right in her comment before. To me, when a client used to come and say, how much substance do I need? You knew already the guy was in a wrong situation. Because, okay, so it is optional for you to put one employee or 20 or 30, then the whole thing is a sham, for sure. But on the other hand, now the thing has become reversed. I have a good friend of mine who works in a multinational company based in the US that works around the globe, and they provide content for entertainment. They provide licenses for TV shows and so on. Their operation in the European Union is based out of Hungary. And you had, in this case, the Spanish tax authority rejecting the expenses and trying to collect money on the royalties paid by the Spanish TV stations to the Hungarian company of these guys, because they were based in Hungary. And it happens that the treaty between Spain and Hungary was very convenient, and royalties were subject to a low tax. And they had a full operation in Hungary. There was no doubt about it. They have 100 people there. They did the whole operation for Europe there, but the Spanish authorities just didn't like the fact that because of the treaty, the payment was low tax. So the question is, what? Should they be organized in the Netherlands and be subject to, in Norway and be subject to Viking type of taxes so that it is deductible? So this is going to be an interesting area to see what is the solution to define what is right and what is wrong in this arena. And so they are proposing some sort of, I don't know what, intelligent writing to address multiple layers of entities. I think if they come with something that really works, these guys should be given a Nobel Prize or something, because this is damn difficult. So, prevent artificial avoidance of permanent establishment status. This is another area, Action 7, where they want to change the rules and the definitions of what is a permanent establishment for tax treaty purposes. And the target here is, are two. One is to avoid the risk of companies organizing commissioner type of arrangements as opposed to permanent establishments, so that the source countries can actually tax. And also artificial fragmentation of functions and risk. And to me, in this, the same as in the past action, another problem is that this is quite hypocrite in the way this is really organized. If you go to the US, in the US, this prevention of the abuses and you should not fraction stuff and so on, if you spend money organizing yourself to reduce foreign taxation, is an allowed, specifically, it is a legitimate business purpose for US purposes. So if you try to reduce foreign taxation, that is the same as if you try to reduce your bill in electricity. It is a legitimate business purpose. Of course, it is not if you reduce US taxes. But if you reduce the taxes elsewhere, that's fine. So here, again, how are they going to come with a solution that somehow comes in agreement? It's a consent for all parties. Is very difficult, because unless everybody would have exactly the same legislation around the globe, by definition you would have differences and the opportunity to have some arbitrage. So then Action 8, transfer on intangibles. This is, as it was mentioned by Alvaro, is one of the important targets here for BEPS. And again, I think they are trying to come with something which is quite impossible. And if you read Action 8, this is the wording that you need to, this is what they want to do. They want a broad and clearly delineated definition of intangibles. How can you do both? There is no way. It's like blowing and sucking at the same time. Either you go broad and therefore you are not clearly delineated, or you go clearly delineated and you're narrow, but there is no way that you can do both at the same time. But here, this is politicians writing instead of technical writing. So this is something I'm looking forward. I will be the chair of the the intangible panel in Mumbai and IFA on this. And we are fighting on what are we going to say in this panel, because this is one of the areas where there will be some new elements in September, and we have the panel in October. I don't know what is going to happen here. So where is going to be a change here? Probably in the royalties article. I guess they will come with some wording to this article. Article 13, they want more effective dispute resolution, and specifically they would like arbitration as part of MAP, which is something that is already in the last version of the OECD model, but they would like it to be more effective. And this leads to the last thing, which is the new kid in the block, which is the multilateral instrument, a BEPS convention. You can imagine that trying to put together two countries to come with a single solution in the many, many treaties that most countries have is going to be very difficult. So they will come with a BEPS convention, I guess, model. What they have to do is first to identify the domestic tax law / international public law issues, and based on that, suggest then what is going to be a multilateral instrument which swiftly implements BEPS measures. So they will tried to put together something where everybody's signing that instead of negotiating treaty by treaty on bilateral basis, because they realize that otherwise it's going to be very difficult to try some harmonization here. And the report is due in September this year, and the convention is supposed to be ready for signature on September 2015. I personally think this is going to be very difficult. Some issues that are very difficult to tackle here are, for example, the things that have to do with all this economic analysis now and where value is created. Where value is created in a multinational operation is a matter of opinion. It's an analysis thing. And taxes are based on law in most countries. And I keep saying that, to me, this sounds very weird, because taxes at the end are a precise number. You either pay $1,000 in taxes or pay $1,010. And it's not a question of opinions of how much it is. It is either 1,000 or 1,010. And so when you start discussing where value is created and different people may have different opinions, to me it's like, okay, you are going to be fine because you are not driving at the appropriate speed. Okay, either you are within a fixed limit and you drive up to 120, and if you drive at 120, you are not being aggressive, you are driving. And you are within the law. Or there is no limit and you can drive whatever you want. But there is no such thing as driving appropriately. And then somebody, a police saying, no, you know, I don't think it's appropriate that you drive at 80 here. You should be driving at 60. And another cop coming in and saying, no, it is fine because you could drive here 110. And so how to put all of this together in a single instrument, to me, is very challenging. I'm not sure how are they going to do this. I just had a conversation with somebody who works in the OECD, and she told me that they are working in dozens of groups, and they are under the challenge and pressure of coming with these things on time. And according to what she told me, they are coming. So that's it. That's what we will have. Thank you.
Thank you very much, Ricardo, for your excellent presentation on the treaty impacts that may derive from BEPS issue. Now, without further delay, I would like to ask Claudia to make a reference of the Congress that will be held in Rio in 2017 and the importance of BEPS for this Congress.
Vou falar em português.
Fala em português.
Bom, em 2017, o Congresso Mundial da IFA vai ser aqui no Rio de Janeiro, na cidade maravilhosa. E, na última reunião do Comitê Científico Permanente, em janeiro desse ano, foram aprovados os 2 temas, que serão os temas principais do Congresso. Para quem nunca teve oportunidade ainda de ir, o Congresso da IFA ele tem 2 temas principais e vários seminários sobre outros tópicos. E os 2 temas principais que foram aprovados, um deles é, como estaremos em 2017, né, será o tema qual é o impacto efetivo do BEPS nas legislações domésticas dos países, porque esse é uma grande iniciativa e que, no final das contas, cada país vai ter que internalizar aí as regras da sua maneira. Então, a gente vai medir quais foram os impactos em 2017. E também outro tema que tem a ver com o BEPS, um dos principais pontos que está em discussão dentro do BEPS é a questão do preço de transferência. Então, o outro tema que foi aprovado é o futuro dos preços de transferência. Então, são 2 temas aí que certamente vão estar mais do que na hora de se conversar em 2017. Esses congressos congregam entre 1.500 a 2.500 pessoas, então, em geral, são encontros muito grandes. E, sem dúvida nenhuma, os congressos da IFA, ocorram onde ocorrerem no planeta, são certamente o encontro mais importante na área tributária, em matéria, aí na esfera internacional. Então, Esperamos que possamos contar com todos em 2017, mas, mais que tudo, esperamos que esse painel tenha despertado em todos aí o interesse de continuar seguindo de uma forma muito próxima aí todos esses avanços do BEPS, para a gente ver também quais vão ser os impactos nos negócios aí das empresas das pessoas e das empresas que nós todos aí, seja na qualidade da área da empresa, ou seja como representante da empresa, seja como assessor, né, temos que lidar aí no dia a dia. Então, obrigada pela atenção.
Eu gostaria apenas de abrir para perguntas, se eventualmente alguém tiver interesse de levantar alguma questão. Pode ser feito em português mesmo. Espanhol. Pode alguma outra?
Japonês.
Alemão. Bom, não... Guilherme.
I have a question for Ricardo. The BEPS Convention. Let's suppose that the BEPS Convention makes worse to deduct interest under a treaty, and that the domestic legislation of the country keep a rule that is more favorable to the payer. In that case, the rule could be that you can avail yourself of the domestic rule. How are they going to wrap this problem?
I told you that if they solve all of these problems, these guys should be given a Nobel Prize, because this is the type. This is the type of challenges that you have to deal. Like, for example, even in a bilateral treaty, when you provide something in a treaty which is not necessarily a rule for domestic purposes, what is the rule to be applied? Like, for example, expanding the concept of permanent establishment. This is something that we were discussing before. If you, as it was mentioned in a presentation earlier this morning, if the domestic rules have for internal purposes, a relatively narrow concept of permanent establishment, can you apply a broader concept for some permanent establishment or activity of a foreign country, of a company from a foreign country, just because in that particular treaty it happens to be broader? If you don't want to tax locally, the treaty doesn't impose a tax. The treaties are to avoid double taxation, not to impose taxation. So that is the type of things which are very difficult to tackle. And even in a bilateral situation, if you sign a multilateral agreement, what are you going to do? The next step that you need to move is to the Vienna Convention on Interpretation of Tax Treaties, where articles, I don't remember, 29, I think, 31, 32, 33, I think it is. You need to go there and understand what is the obligation of a country which has signed something which is not consistent with its domestic legislation. Good faith application of the treaty should lead to that country to amend its domestic legislation, which is something that has to do with the meeting here in Rio in 2017. Are countries going to sign and then amend legislation, or they would have to amend legislation and then be in position to sign the treaty so that they are not caught in bad faith there? The political pressure at the moment is that they come and run right away to sign the convention and do the homework afterwards. That's the political situation.
Thank you.
Bom, diante da avançada hora, eu gostaria de... tem mais uma, desculpa. Dali, please, sorry.
Thank you. Just to react on this, well, first of all, actually the guy who's doing this work is a very good friend of mine, so I will tell him that you will get a prize from...
good friend of us, Rafael.
Exactly, yeah. And if he cannot put it together, I don't think a lot of people can. Now, just on this, of course, a treaty does not really create a taxing right. If you don't have a taxing right under your domestic law, Yeah, thank you. So a treaty does not create a taxing right. If you don't have the taxing right under your domestic law, you cannot tax because a treaty allows you to tax. As simple as that. What they are trying to do, actually, at least what I understood from the OECD, is that usually when they change something in the convention, they don't change the convention itself. They change actually the commentary to the convention. And in the commentary, they would say then, okay, this is just clarification of something that was not very clear in the convention. Why is that? Because you have this problem of statutory and ambulatory interpretation of the convention. If we have a convention that we negotiated together in 2000, which commentary do we apply? Do we apply the 2000 commentary, or do we apply, for example, the 2010 commentary? Usually they avoid that by saying all changes to the commentary basically are clarifications. They don't change the substance, right? And then you just apply the later commentary. Now, sometimes they go beyond and they change really important things, and then how are you going to apply these important changes to 3,000 conventions that had already been negotiated that are applicable? So they've been looking now, I've had this discussion at least 10 years ago. They put a commission together with Philip Baker, with Avery Jones, with others, 10 years ago to look into how can we find an instrument to actually change existing conventions without renegotiating each one of them. And that's the main challenge that they have. And that's what they are trying to do.
I insist on the Nobel Prize for the guys who can do it.
Bom, eu gostaria então de agradecer a presença de todos, em especial de nossos ilustres palestrantes. Thank you very much. Obrigado.